name is Shauna Wordinger, and I'm from Florida in the United States of America. I am a business consultant, accountant, bookkeeper, a tax preparer, and basically working with various types of businesses. I have about 100 clients that I work with and helping them manage their finances. Also teach a QuickBooks class. It's an accounting program here in the United States. I believe actually sold all over the world now too, where it helps with organizing your finances. So just wanted to share kind of today a question I get a lot from people. My own clients, the about 1,000 students that I teach each year on QuickBooks is, I don't know how to read my reports. I don't know how my business is doing. They a lot of times are very successful businesses that are doing very well, but they're just kind of flying by the seat of their pants, if you want to call it that. I mean, they're just making it through every day, just trying to get people paid and just kind of making the world move around, but still don't know, am I making money? I don't even know if I'm losing or making money in my business. And so I want to kind of share the two main financial reports. There's also a third one I'll mention that I think all business owners need to understand, need to know how to read, know where to find the information off their system. I think it's very important that you have an accounting program. There are various programs out there. The one I know the most is QuickBooks, and they're very inexpensive. I think every business office should learn that software or whatever program you choose and making sure that data is up to date and is consistently provided to you as an owner. Have a bookkeeper do it for you. You learn it yourself, whatever it may take for you to have consistent financial reports. And the main report I want to bring up first is it's called a balance sheet. And so you should be able to pull that out of any accounting program. The one main thing that you'll notice on that report is there's only one date that is showing on the report. So, I call it like a snapshot picture, like you're taking a snapshot, a picture of your office one day in time. And so as you look at that report at the very top section of it, it says assets. What assets are, I like to call what you own, what is in your possession. So assets include your bank account. That would include, if you deal with inventory, what you have in your possession, land, furniture, building, vehicles, all your fixed assets, things that you own that are valuable to you. That report should add that all up together, and that should be total assets, what's in your possession. The next section of the report is called liabilities. I like to refer to this as what you owe. So assets are what you own, liabilities are what you owe to other people. So this would be debt outstanding, like bills that have come in that you haven't paid on yet that are referred to as accounts payable. You probably will see on there credit cards. If you have a credit card you charge on, not your money, you owe that, back to the credit card company. Lines of credit, loans at the bank, all of the outstanding third parties that you owe money to. Again, the report should total that together as of a set date. Let's say today, as you look at your report, whom you owe and how much you owe to others. And then the last section of the report is called equity. This is probably the more confusing part of the report. I don't want to go into depth to all the kinds of accounts you might see in there, but I like to call this your net worth, what your business or nonprofit is worth. So if I was to take my assets, it equals your liabilities plus your equity, and that's the formula on that report. Now, another way to kind of modify that formula is to kind of focus a little bit more on the equity section. If I was to sell everything I own, let's say liquidate all my assets, sell my land, furniture, building, get it all to be cash at the bank, use that money to pay off all my debt, whomever I owe. Hopefully there's money left over in that big transaction, but at the end of that, that's your equity, what you're worth. If I was to sell all my assets, pay off all my debt, what's left over. Now, that's a book value. Obviously, market value could be different on that, but that equity section should give you a pretty good standpoint of what you're worth, what the business nonprofit, again, is worth. So that's that first report, again, called your balance sheet. The second report that I think is very important that you understand on how to read is called a profit and loss, or you may see it or heard called an income statement. And one main difference of this report, it always has two dates on it. So a balance sheet reflects one day, a profit and loss always will reflect 2 dates. And on any accounting program, you should be able to pull that report up and adjust those dates accordingly. So let's say we're taking a picture of our business for the first 6 months of the year, or you could probably change your dates, month to month if you want to see monthly how your business is doing trend-wise monthly. But the top of that report would be called income or revenue, basically money coming in over that time frame. I like to call this like a movie. So as you look at your reports, that there's a start date and then an end date. The same would be true like if you go to a movie. There's a starting time and ending time. And so as you view this, thinking through the lens of a movie you're watching. So money coming in is our income, our revenue. You'll see, or may have a cost of goods sold section, depends your industry. But a lot of these expenses are directly related to your income. Meaning I wouldn't buy materials, I wouldn't pay labor costs without having related income to it. So that's again cost of goods sold. That gets subtracted from your income, giving you a gross profit amount. And from there below is going to then be all your other types of expenses. I like to call these general overhead administrative type costs. The formula there at the bottom is your income, money coming in, minus your cost of goods sold, minus your other expenditures. The end result is your profit for that time frame, whether it be a month, 6 months, whatever date range you're looking at that information on. So that is the second report, I think very important, probably one of the more important reports to be looking at regularly, at least once a month. I think it's very important to have those reports visible. And then a third report I'll just mention, I won't go into depth about, is called a cash flow statement or a report. So don't confuse the profit and loss that we just spoke about as money in the bank. So let's say you show a $10,000 profit at the bottom of your financials, your profit and loss. That's not always cash sitting in your bank. A lot of times we use our profits to buy equipment, we use our profits to pay down debt. There's other purposes that our profits are tied to that we're using that money for. And so the third report would be a cash flow projector or statement. You could, in some financial reports and systems project out 4 to 6 weeks in the future as to what cash reserves you have currently at your bank, what you have expenses coming up, money coming in, and knowing financially what your cash projection is. Because in some cases you have set costs like labor. There's no doubt that your payroll has to be ran every 2 or 3 weeks or every week, depending on your payroll cycle. There's no doubt rent has to be paid every month at a set time. And so knowing those dates as you are projecting cash at the bank, knowing when those financial expenditures have to be paid for, and recognizing that income coming in and making sure that timeline hits there properly to have money in the bank to pay those related expenses. So that is, again, the 3 main reports that I think all accounting programs will provide to you. I do encourage, if you don't have somebody that you're working with or you know yourself how to use your accounting system, it is worth it. I, again, teach a class that I am very glad that owners of businesses come to my class. I actually have many owners that will just sit in my class. They don't do the work. They don't actually hand punch in all the transactions, all the financial work, but they understand their system. And I think it's very important, especially the reporting side of it, these reports we've just spoken of, that all owners understand them and look at them regularly.